earlier presentation, we have talked about the disposal of profit and interim dividend. In this presentation, we are talking about presentation of CDT, treatment of proposed dividend, and the difference between interest due and interest accrued and due. First come first, dividend account will be opened for each type of shares, either it is the preference shares or equity shares separately. Domestic provision, all the domestic companies make the provision for dividend tax at the prescribed rate. Now, as per the finance bill, the prescribed rate is 16.995%. Interim dividend is shown as appropriation surplus in the balance sheet. In the same manner, final dividend is also to be shown as the balance sheet. Now, in case of dividend income is absolutely free in the hand of the shareholders. Why? Because the company has paid corporate dividend tax on such dividend. Corporate dividend tax on dividend is directly linked to the amount of dividend. When the dividend is being declared, either it is the interim dividend, final dividend, equity shares, preference shares, either it is proposed or declared. Out of the current year's profit, the amount of CDT is to be appropriated, and it should be reflected in the accounts of the financial year, even though the actual tax liability in respect of may arise in a different year, because the dividend are to be proposed in the previous year, but it is to be paid in the next accounting year. Now, since the liability of the CDT is related to the distribution of profit, it should be deducted from the surplus of the same year in which the dividend is recorded, in which the dividend is declared, you can say. Now, how we are going to show the dividend in the balance sheet? रिजर्व एंड सरप्लस की हेडिंग के अंदर सबसे पहले हमारे पास क्या आता है? सरप्लस. वी विल सबट्रैक्ट डिविडेंड ऑन प्रेफरेंस शेयर्स, सबट्रैक्ट डिविडेंड ऑन इक्विटी शेयर्स, एंड along with that dividend, corporate dividend tax, either it is on your preference shares or equity shares. It is to be calculated on equity and preference both. The final amount is to be shown in the surplus account. Now, journal entries related with proposed dividend. First of all, as you have already know that proposed dividend are to be paid out of the current year's profit of the company. Those current year profit are known as surplus. So the first entry, surplus account debit to proposed dividend to provision on CDT, because the provision for CDT is already being made along with your proposed dividend account. Then when the dividend are to be declared, proposed dividend account debit to dividend payable account. Then when separate bank account is to be opened for paying of dividend, so entry will be dividend bank account debit to bank account. The amount of dividend is being transferred with the actual amount of dividend that is being payable to the shareholders. Payment of dividend payable account debit to dividend bank account. In the previous slide, what we have created, we have created the dividend bank account. Now in the next, we have dividend bank account is to be paid. So dividend payable account debit to dividend bank account, whatever the actual amount of dividend that is being paid. If some dividend remains unclaimed, it is transferred to the unclaimed dividend account. Dividend payable account debit to dividend to unclaimed dividend account. If the dividend remains unclaimed for next 7 years, it is transferred to the investors education and protection fund. If dividend unclaimed remains for 7 years, it is transferred to investors education and protection fund. Last point of on payment of corporate dividend tax, the tax that we have created, the liability for we have created, it is paid to the government. Entry for that, corporate dividend tax account debit to bank account. In case of CDT, it is not paid. It is to be shown in the balance sheet under the heading of the current liabilities. After that, now if I have already talked in the beginning of this presentation that we are going to make a distinguish between your interest due and interest accrued. Interest accrued and due, and interest accrued not due. What is the difference between them? Interest accrued and due means due date of interest is arrived. In this case, due date of interest not arrived. As per in the old schedule, we are going to show it separately. Interest accrued and due was shown under the heading along with the debentures or along with the long-term loans. But in case of interest accrued but not due will be a part of current liabilities. But as per the new schedule, what we have to do it, we have to show it under the heading of the current liabilities and other non-current liabilities. Now it will be a part of the first one. This is part A. A will be shown in the heading of current liabilities. This is nothing but B, that will be shown in the heading of other current liabilities. Thank you. In the next presentation, we are going to talk about the important adjustment of final account and their treatment in a tabular form. Thank you.